What I'm afraid of the option for.
I'm going to share a screen here. Yeah, thanks for bringing, thanks for that question, and thanks for bringing that up. Also, Brett, because again, this is a launch class, really. So I always start out talking with the launch agents about the things we see in every buyer folder. And so here in Dot Loop, I've kind of got those. I've got some extra things in here because this is my class folder. But we're going to start out talking about the worksheet. So that's top of my list here. If it's someone you're representing, obviously you're going to have the buyer agency agreement in there. There are other options if they don't want to be necessarily tied to you for a period of time. But for launch agents, for most people in here, the exclusive buyer agency is what we're looking for. The affiliated business disclosure, also required document in our folders here. For buyers, the inspection advisory, that's an internal form that's going to be found in our KW and KC Metro templates in Dot Loop. I'd like to see the cyber protection notice in there for both buyers and sellers. It's a conversation I think everyone should have. It's in the contract, it's in our agency agreements, but I still like to see this separate form in there, just as an insurance that you have had that conversation. Everyone that's involved in a real estate transaction is at high risk for hackers, and the hackers have gotten very sophisticated over the years. So lenders have been hacked. Title companies have been hacked, agents have been hacked. It's a reality out there. I also like to see the EPA lead-based pay brochure in every buyer's folder, because even though a buyer may tell you that they're maybe looking for new construction, they don't want anything more than 20 years old, they're going to surprise you, just like they're going to surprise you by jumping state line. I'll talk about here in just a second too. But so just go ahead. That's again a federally required document that when they are initialing the lead-based paint disclosure, that they've received the pamphlet. We don't want to make liars out of them. So just go ahead and send the pamphlet. All you have to do is share it in .loop or DocuSign if that's what you're using. I also like to see, when we're working with buyers, both Kansas and Missouri agency disclosure brochures, because again, buyers will surprise you. They'll tell you that they only want to look at ranches in Lenexa, and then they'll end up buying a split level in Belton. So just make sure that you're covered there. All right, some of those are my other cheat sheets. Okay, any questions about any of that? Those of you on Zoom, either feel free to interrupt, or you can raise your hand and I'll check those occasionally in here. All right, so we're going to start out with the buyers. Again, talking with my launch agents, I think most of the time the first business that the new agents get are buyers, so kind of usually start out there. I also want to make clear that if you don't understand some of the conversation that was going on over the last few weeks about these documents, there are lots of sources out there for you to get apps. Lenders have apps, title companies have apps that will help you get you started on these forms. They're not complete. I've never seen one that had everything included on it that we should have on our estimated cost worksheets, but they're certainly a good place to get started. I also tell all of my launch agents, when you're working with the buyer, make sure that you've had a conversation with the lender. The pre-approval letters that we get give you some information, but not all of the information that you need to properly write the contract. You need to make sure that you are absolutely clear on what kind of loan they're getting, whether it's conventional or one of the federally related loans, or if it's another source of money. You also need to, I know it's gonna interrupt me here. You also need to make sure that you understand that the interest rate is the interest rate that is maybe quoted on the pre-approval letter, maybe not. But is that where that buyer has to be? Can they float the interest rate? What happens if interest rates go up a little bit? You need to know the term of the loan, whether it's a 15-year, 20-year, 30-year, the most typical ones that we see. So you're having a conversation with that lender anyway. And while you're having the conversation with that lender, then you're also asking them if they could send you a copy of a good faith estimate. Again, that's a great place to start. That's the best source for you to get that lender's loan costs, and then also their estimate of the monthly payment. So you're having that conversation with the lender right off the bat so that you're prepared with all of that information. I'd like to see, again, with the new agents, I always have this conversation. I have this conversation as much as I possibly can with everyone. When you start working with the buyer and they do have a pre-approval, of course, that's one of the first questions you ask them is if they've talked with the lender. And they may have that pre-approval for 450, and they may have received some kind of good faith estimate from the lender. And then maybe you can get a copy of that or ask the lender for a copy directly. But is that where the buyer wants to buy? They may not be comfortable with that payment. And so I think that's a really important conversation as their consultant for us to have with them. The lender maybe gave an estimate of the payment, and are you comfortable with that? And the buyer says, no, I want to back off a little bit. So that now we have to figure what sale price that buyer would be more comfortable. So there's a little bit of reverse engineering going on in there sometimes. But I like to see a buyer's estimated worksheet when you first start working with a buyer, because for two reasons. Number one, because we do figure their monthly payment as part of that. And secondly, how are we going to know how to write the contract as far as asking the seller to participate in the buyer's closing costs? A lot of buyers, especially first-time home buyers out there, maybe have done really, really well by scratching together their down payment and don't realize what their closing costs are going to be. They may be aware that there are closing costs, but not how much. So starting out on that kind of basis, I think, number one, again, puts you in a really, I'm a consultant. I'm here to help you through the entire process. So I like to see one of these as we start working with the buyer, but it is absolutely required that you have prepared and presented one of these to a buyer with every offer that they make. Even if they're making the same offer on a different property, taxes are going to be different, that kind of thing. So on every single offer that they make. So I do have in here, just as an example, I pulled up and did an estimate on the Platinum app. And again, title companies have these, lenders have these. Feel free to start out with these. These are a great place to start. They just are not complete, and really, you have to input the numbers in here anyway, so why not just use the forms that are provided to you? So this is kind of what they look like. So number one, I don't like them because they're not complete. You're going to have to add things to them anyway. They are also branded, which is fine, unless, I use the Platinum one and maybe the sellers decide that they want to use Chicago Title because that's who they've used in the past. So there might be a little bit of a discrepancy there too. So I also want to say that I'm going to be talking about the KCRAR forms this morning because I think that's where most people just typically go. I want to give a shout out to David here. He has developed an excellent spreadsheet that's available on the portal and the documents tab on the portal. I'm not going to tell you how to get to that here. That's something for you to figure out. Talk to Brad or Kim. They can tell you how to do that. And it does all the figuring for you. Once again, you have to put the numbers in. You have to know what the numbers are and put them in yourself. He's got little cheat tabs that you can get the title insurance cost, and it kind of figures your PMI or MIP for you on there too. So it's a wonderful resource. I did actually use that one myself, but I think most people tend to go to the KCRAR form. So that's where we're going to go here. So starting out with our buyers, so I showed you the Platinum example. And here's the buyer's estimated expense worksheet. When you go into KCRAR, there are two forms available for you. There's one with calculations and one without calculations. I think it's easier to use the one with calculations. You'll see that it has two columns on it. I'd like to say that they put two columns on there for our benefit and for our conversations with our buyers. We start out with what our offer is going to be here in our first column. The second column could very well be as we're getting into a negotiating market, which we hadn't seen for a few years back there. So this is what we're offering, but this is what the seller may come back for, or can come back with. Yes, ma'am.
You've been using, I'm doing a little bit of stuff. Is this, I know is the PCR, but we also use the form in, matrix, like, the less, the dropped numbers of change under the guidance. Have
Okay,
you seen that? I'm just curious,
I-
is it right or wrong? Because it's less detailed than this, but is that a?
who's familiar with Ellen? I can't speak to that.
It's in. Yeah. It's in the, yeah, there's two sellers as well. That's not that everything.
You know, my guess is if it's in there, it probably has everything that we need, but thank you for Mackenzie for bringing that up. I'll go look at it.
Should be our best practice, just because it's. More realistic.
Your best practice should be what you can do, what you feel comfortable doing, and as long as it hits it. Yeah, Kim, that would make compliance, wouldn't it?
I would say as long as it contains all the information that she's going to go over, the inspection costs, usually. Yes. I'll print it out.
We'll take a look at it.
Okay, that's what I was using, so I just sitting here on those.
Okay,
Yeah,
It's not as detailed.
it's just has some of those features, but it's very emotional. Let me print a version, then I'll bring it.
Sorry, what's the reason? They're using PC coaching,
I'm sorry, what?
they're using PC coaching or using
PC coaching, yes.
PC coaching, and that's. They don't need Lisa, but no,
KW key.
PC coaching.
Okay, but no, that's fine. That's right. Brett, are you familiar with the forms that are on MLS or buyer and seller expense sheets? Do they cover everything? No, on MLS.
I need 7, which the sellers has.
I've seen it, but I'm not. very-
Okay, all right. Mary's the only one apparently in the city that uses them, but
I'll be familiar with them about 10 minutes.
yeah, there you go. All right. All right. Okay, so our buyer's estimated expense worksheet, we of course have our header here, and this does have the KCRAR logo on it. The one that's our internal form also has our logo on it. The buyer is, you can identify the buyer just because this is just an internal form. This doesn't go anywhere other than the brokerage, the client and you. So, you know, it can be Bob and Betty on here. That's all right. I always try to point out that on the exclusive buyer agency agreement that's the best place to put their the names that they want on the deed, but this can be an informal. So Bob and Betty buyer here identify the property and the street address is fine. We don't need the legal description on here. And our estimated closing date, if you're doing this for a contract, you're going to use the date that you're putting in the contract for your proposed closing date. And I've just kind of made up one here, purchase price of $400,000. Again, you need to know what kind of loan the buyer's going to be applying for. And so therefore what their down payment is and the type of loan we identify here on line 7, conventional FHA, VA, USDA, any other source of money that they may be using. And so that figures that there for you. The 400 minus the down payment is our mortgage loan of 360. Our first little section here, origination charges for the lender. When you get, if you're getting this from the lender, most lenders have kind of gotten to where they just kind of group all of their costs together in one fee. And those of you that are out there doing this every day, which I am not, I've started using about 1,500. I think that's probably, you know, kind of covers most of them. If you start seeing that change, let me know so that I can update my forms too. Loan discount fee. Who even remembers what a loan discount fee is? Anybody? They do kind of still pop up in the market a little bit. Oh, okay. Loan discount fee is a fee that a buyer could pay as part of the loan costs. Of course, everything's negotiable, also something that the seller could pay on behalf of the buyer, but it reduces the interest rate over the lifetime of the loan. It's interest paid up front, prepaid interest. Right. If you do see those, and as interest rates go up is when we start seeing them come in, but it is considered to be a buyer cost. So we would include that here. And then other lender fees, that I guess there are still some lenders that might have like a separate underwriting fee or a separate doc prep fee or something along those lines. But as I said, most of them have kind of grouped all of that into their loan origination fee. So be sure that you're reading anything that you get from the lender carefully so that you can put it in the correct place here. But usually as we're filling these out, those are both zeros in there. And I really do like to see every line addressed, whether you're putting something in there or not. As we get into the lender coordinated services, so these are things that the lender orders, but are not lender fees necessarily. And I just should have started out here too. I do like to pad these a little bit. On the buyer side, I like to put fees a little bit higher than I'm pretty sure that they are. I'd like to see the buyer pleasantly surprised, rather than, oh my gosh, so much more than you prepared me for, Linda. So I'd like to pad these just a little bit. And then also that kind of covers you a little bit for maybe a fee that you didn't catch coming through here. So credit report, I usually put in about $100 in there. Everybody knows what that's for, right? Pulling the buyer's credit scores. The appraisal fee. Everybody understands that one? Appraisal fee is what the lender is the one that orders the appraisal, but the buyer is the one that pays for it. The credit report and appraisal are usually paid for as the appraisal is ordered. Those are both prepaid things. Most of these other things are paid at closing, and we'll get to how all of that works here pretty soon too. Flood certification fee. Anybody know what that one is? Don't be afraid. Right. Flood certification fee is a one-time charge that the lender charges to it. They hire an outside company to check the flood map to see if they think that the property is affected by a floodway or a flood zone and therefore might require flood insurance. See, this is one of the reasons why we do this class, is because if you hand this to a buyer or seller, on this one to a buyer, and they ask you what it is, you need to be aware of what it is, right? It doesn't make you look very good if you have to say, well, I don't know, but I know where I can find out. Tax service fee. Anybody know what that one is? Tax service fee, again, one-time charge at closing, outside company that the lender hires to make sure that the taxes are recorded as being paid every year. So one-time fee. All of these are buyer's costs that can be reimbursed to the buyer by the seller at closing. So we'll talk about that as we get there. Survey if required. So it's been years and years and years since I've seen a lender require a survey, but it used to be that lenders would require not a staked survey, but just a plat map survey to see if there were any encroachments on there. I haven't seen that for a really, really long time. So that's typically zero. Title escrow closing fee. Everybody's aware of what that one is, right? The fee that the title company charges the buyer. You get that from your title company, wherever the buyer is going to be closing. Mortgagee's title policy. Somebody tell me what that one's all about. Are people just shy? People are just shy in this group, aren't they? The mortgagee's title policy. So is everyone kind of aware of what the owner's title policy is? Yeah, okay, I'm getting some head nods on that one. The lender also wants to be covered by that same coverage. If a claim is made and successfully made and the buyer loses the ownership of the property, the lender now has lost all of their collateral for that loan. So they want to be covered. This is here in our market, in our contract, the seller pays for the owner's policy that covers them and the new owner, our buyer. But here locally, it's a buyer cost to pay for that mortgagee's title policy. When you're looking at the title company paperwork, that can also be called the loan policy or the lender policy, because everybody remembers that mortgagee is the lender, right? Recording fees, and I kind of grouped together any recording fees and e-filing fees in this one, as you are getting the estimates that you maybe get from an app from the lender or from the title company. This includes the e-filing fee. Anybody want to tell me what the recording fee is? Anybody know what that is? Hey, say it again. Right, recording everything but the deed is included in that, absolutely. It's a per page fee that the county charges. We really don't have any way of figuring that because it's, it's so much for the first page and then so much for subsequent pages. So a good estimate here, and I think most of the apps that I've seen kind of estimate this at about $200. And so what I've got in there is the recording fee and the e-filing fee in there together. Oh, I should have pointed out too that I don't have a printed copy of this. I can send this to you if anybody wants to use that as a cheat sheet, but I do have my explanation cheat sheets up here if anybody is a paper person like me, but I know all of you will want me to email you a PDF copy. And so email me at lindawoodward.com is the easiest. Not you launch people that are here with me, but my contracts coach email. But and then in the subject line, just put cheat sheets. I'll tell you what we'll go over the cheat sheets here, so that might make more sense a little bit later. All right, so those are the outside services and fees. How about the prepaid expenses here? Prepaid expenses, we have our prepaid interest. So when we have a buyer that's getting a loan, and if they were closing today on the 18th of February, when would their first payment be typically? April 1st, right? Because in a fully amortized loan, every principal and interest payment of that loan is the exact same. The very first one is the exact same amount as the very last one, 360 months from now, if it's 30-year note. So the closing date is the one and only day that the lender has to collect the interest from the day of closing to the end of the closing month. Let me back up just a minute. Everybody understands that principal and interest part of the payment pays for the interest that is accrued in the previous month, always. So their April 1st payment is going to pay for the interest that accrued in March. So today on closing, we have to figure what that lender is going to charge that buyer from today, the 18th, through the end of this month. And also just to kind of clarify, we always use a 365-day or a 360-day year. I do on this, a 360-day year. Every month has 30 days so that we don't have to remember if this month is this a leap year or not, that kind of thing. So then that will take us to, I've got to move you all here. One of my cheat sheets is how to figure interest. Oh, there's the guy that has to be here because his wife is teaching the class. All right. All right, so how do we figure interest? Interest is one of those things and I know that this is one of the reasons why people don't like to do this form. And so again, thank you all for being here, all of you that are wanting to do the right thing. Figuring interest is one of the easiest things that you can do. Anybody remember Ashley was in class with me? Who else was in class with me? I know that I taught you how to do this in class. Yeah, okay. Oh, okay, right, okay. Oh, Tyler, yeah. Hey, how are you? Good, all right. Do you remember how to figure interest? Okay. Read up here and tell everybody how to figure interest. Yeah, sorry. I should have backed that off down a little bit here for you. To figure interest, you take the loan balance. And so as we're dealing with the buyer getting a loan, you get their initial loan, right? So that's what we have, times the interest rate. And then that gives you the annual interest. To figure the daily interest, you divide that by 360 days. You can't really get any easier than that, all right? And then you figure, and of course the buyer is always going to be charged the day of closing for that interest. So you start counting today. And then that's when Linda has her little cheat sheet, but you can count on your fingers too. That's what I do. All right. So from the 18th and then count for, again, a 30-day month on there. So on this one, and I can't remember what closing date I might have used on this one, but so the daily interest, so you've figured that by dividing the annual interest by 360 days times the number of days left in that month, including the closing day, on the 19th, as I did it there. So the 34.52 times 13 gives us the 448.76. And that's what we would put then in our prepaid interest. Anybody have any questions about that? Pretty darn easy. All right. Homeowners insurance premium. So at closing, the buyer's charged for 1 full year of homeowners insurance. And then we're also going to be collecting a little bit to establish the escrow account. We're not going to know that at any point when we're doing one of these, because that's something that the buyer is going to be doing during the due diligence period or during the inspection period, is getting their estimates. But we have to do this either at the beginning or as we're writing an offer. So rule of thumb, and I talked with Elise about this, and we kind of figured that this still is kind of applicable. Rule of thumb, or just kind of a little cheat that you can use on this, is because we're insuring the value of the property, so the sale price of the property. You take the sale price of the property times 0.65, and that will give you your annual premium. 0.65%, I'm sorry, 0.65% gives you your annual premium. So figuring that, then you put your full year premium in here, and all of that's on my cheat sheet, right? Just for anybody that wants it. And then those next two lines, lines 28 and 29, are the lender establishing the escrow account. The mortgage papers and the loan papers all say that the buyer is responsible for keeping insurance on the property and making and paying the property taxes, but lenders don't trust buyers to do that. So lenders say, hey, we'll take that off of your plate. We will collect 1/12 of the taxes in every payment and 1/12 of your homeowner's insurance in every payment. And then we, the lender, will make those payments for you when the bills come due. They have the legal right to establish that escrow account. They are limited by how much they can collect. So again, because I pad this, I say, well, we're going to collect the lender's going to collect 3 months of each one of those. So 1/12 of our homeowner's insurance is $217 a month. So that times 3 gives us a $650. And our property taxes, I think I figured at $4,800 on this one. So $400 per month for 3 months, $1,200. So that establishes the escrow account. That's all part of the prepaid expenses. Again, all of this, everything that we've talked about here is payable by the seller as reimbursing the buyer for their closing costs that we can ask for in the contract. Other costs here. So our homeowners prorated insurance or home association prorations. Got to get my mouth working today. I figured this one, $50 per month. This is a proration, and I know that's another one of those words that kind of scares people here. Proration is something that is a cost that is split by buyers and sellers at closing. So what one is paying it, they're reimbursing, one party is reimbursing the other party. Homeowners insurance and taxes are the ones that we see most of the time. We don't have, you might see like heating fuel, if there's a propane tank on the property that's prorated. Am I leaving out? Anybody throw anything else out there? Those are the ones that we typically see. And Linda has a cheat sheet for prorations too. How to prorate. So when you're going to prorate something, you decide who's going to be paying who at the closing table. When we're talking about HOA dues, whether it's an annual, semi-annual, or monthly in some kind of community, that's been prepaid. Those are always paid up front. So an HOA, and I figured this one on an annual because this is a single family freestanding house. So the seller's already paid that HOA. It's now the buyer that's going to be reimbursing the seller at closing. So decide who will be paying at the closing table. In this situation, it's going to be the buyer. Determine the daily figure of the cost. And so again, you have your annual cost or your monthly cost or however the payment is made. This one I figured on an annual basis. Annual cost divided by 360 because again, every year for our purposes has 360 days. Determine the number of days that the buyer is going to be paying for. So again, if it's an annual figure, we're going to, and that HOA was paid on the 1st of, see if I'm going to confuse myself here, was paid on the 1st of January. just what this one is, I think. But be careful because the HOA dues are not always paid the 1st of January like our taxes are here. They could have been assessed in, the 1st of July or on a quarterly basis or whatever. So just figure from the day of closing to the end of whatever that payment period is. Multiply by the days by that daily amount. See, none of this is really difficult. You know what? There's no algebra involved and there's no geometry involved. This is all stuff you learned in 4th grade. And my 4th grade was a lot longer ago than any of yours. If I can do it, you can too. Oh, I do have some questions. Let me see what I've got in here. Nope. Need you to go away. See if John says, where can I get this sheet? My cheat sheets? Email me if you want any of my cheat sheets at linda@lindawoodward.com. Oh, there you go. Got it. All right. And then contracts coach too for all of my launch people they know too. Oh, look at all of the people I have here. Just a couple of faces showing. Okay, prorations. HOA transfer fee. You'll run across that sometimes. Oh, you're right, I do. Thanks. I really like it. I really like it when people remind me. Thank you. All right. HOA transfer fees typically in some of the planned communities. So you'll run across those occasionally. You should be notified by the listing agent if that's going to be something that you need to deal with. The home warranty fee, I didn't include one in here. Home warranty fee for the buyer, and we're doing the buyer's estimated here. Again, that's one of those things that we have to have a conversation with buyers and sellers about because that's what keeps our E&O insurance. And one of the things that keeps our E&O insurance covering us on this. So have that conversation. And if the buyer's going to be paying for it themselves, if they want one, you would absolutely include it on here. If you're asking the seller to pay for it, I don't usually include it on here. But if the buyer's going to be paying for it, absolutely. And again, you'll get that information from the home warranty company as well. Broker's commission. Most of the apps that I've seen have updated their commission parts of it and do include our commission. You have to put in either the rate or the flat amount if you're charging a flat amount for your compensation. But I go ahead, please, even though you're pretty sure you're going to be asking the seller to pay for this and the seller is going to be paying it, we hope, still include it on here. Because this is something, again, you have to remind the buyer every chance that you get that if whatever the seller is not agreed to pay in the contract, the buyer's responsible for. So please go ahead and include it on here. And also your $4.95, or if you are charging any of that additional commission there, because it's really rare that I've seen a seller agree to pay that on behalf of a buyer. So include your entire commission on here. And I do split it out here because when talking with the buyer, I say, well, we hope that the seller is going to be paying this, but you will be responsible for this $4.95. The others in there's actually, I use the others on down further down there. Any other costs though that are specific to a situation, specific to that property, specific to that buyer. So that they give you a couple of opportunities to put things in here. The inspection cost. This is one of those things that most of the apps do not include. Do not include any inspection costs that the buyer might incur. Those are things, again, once again, they are prepaid. They are paid at the time of the inspection, but they are a reimbursable cost if we're asking the seller to pay any of the buyer's closing costs. And I think I've got these kind of realistic in here. A whole house inspection, about $500. Then I also, and a lot of times that does include the wood destroying inspection, but I also just put that out separately here. Some of the ones that I think that we should probably recommend to every buyer, having a radon test done, having a sewer scope done. That's not just limited to the older properties, that's really newer properties as well. New construction can have sewer line problems. So, and if the buyer wants anything else on their own, like mold, if you have had that conversation with them, they might want to have a property tested for mold or air quality tests. But I almost automatically include the sewer scope and the radon. But whatever seems appropriate in that particular situation, you put in there as well. And so this form, because I'm using the with calculations form, totals all of those costs for me, starting back up here on line 12. And totals everything that we expect the buyer to be paying. And this is not including their down payment. This is where then we come to talking with the buyer about what are we going to ask the seller? Do you have this much cash? Do you have this much available to pay at closing? Line 45 is the seller paid closing costs, if any, anything that we're going to be asking for in that contract. So this is then where you would put that $12,000 for your compensation back in, and it will subtract that from the total that the buyer would bring. But again, I always want to prepare them for the fact that they might be paying that or some of it. And so then if the buyer is saying, well, no, my gosh, no, I don't have $10,000, for that. Well, okay, that's when we make the decision. What are we going to ask the seller to pay in the contract? One of the really important reasons, it doesn't really count if you write the contract and get it signed by the buyer and send it off to the seller and then start doing this. It certainly doesn't count if you do all of that and then get it signed back from the seller and then you do this. That doesn't count either. This is the best practice, and I mean, what state license law requires is that you do this before you send the offer, before the buyer signs the offer, right? So that they understand all of this. So we have our seller paid closing costs, anything that we're going to be asking the seller to pay for there on line 45. And then on line 47 is our total estimated amount due from buyer, and that is closing costs plus down payment. So they're fully prepared for that. Minus the commission, minus whatever you put on line 45. Yes, thank you. All right, buyer initials, that page, on most of our things, buyers and or sellers initial, the bottom of the pages. And we're not done with the buyers yet, because here comes the fun part, the monthly payment. This is when you really hope that you've gotten something from the lender, although this is really easy to get to. So the interest rate, so we identified the loan that they're getting, the interest rate that was quoted either on the pre-approval letter or that you've gotten the quote from that lender, the term of the note, because if you're going to be figuring this, you have to know that as well. So this was a 30-year note that I'm playing with here. Our monthly principal and interest. There's no way you're going to be able to figure that out. There's a really complicated algorithm back there. So either number one, you're getting it from the buyer, or that is when using one of those apps, or for this part of this, I use Carl's Mortgage is an app that's been around forever, and it does a great job on figuring this kind of stuff for you. Because, or you want to do it old school, like Lynn and I have done it. I still have one of my little cards. Do you have one of your little rate cards? Your payment factor cards? Yeah, right. You want to do it old school, you can do it that way. Do you even know what I'm talking about there?
I've seen one. It was behind glass.
Yeah, in a museum.
Behind glass.
Yeah, yeah, exactly. I've still got one.
No, somebody showed me one.
Okay, all right. So that you really do have to go to an outside source to get the principal and interest part of the payment. There's no way that you're going to be able to figure that out. So we have our monthly principal and interest figured there. Then using some of the figures that we worked with on the first page back there, we have 1/12 of our taxes because the lender is going to be collecting that for the escrow account or impounds account. I always forget that some lenders are starting to call it that again. So our taxes, 1/12 of the $4,800 is the total. That's then the $400 a month. Our hazard insurance that we figured at $2,600, 1/12 of that is $200. And $17. On that first page, I should have said this too. I don't worry about cents. I round and use whole figures. On the payment, I do tend to keep the cents in there. I mean, you could round on this too. That's fine too, because remember the key word of this is estimated at the top of that page. The MIP or PMI premium, again, it's very dependent on the individual that's getting the loan. PMI is figured based on how much down payment they're making, what their credit score is. There are a lot of different factors in there. So I use a very high one when I am making that. I think 0.85% is about the highest that anyone would charge. So that's what I figure, because I don't know how that buyer is going to be qualified for that. So and it's 0.85% again.
On the interest rate, are you taking the interest rate that day?
Whatever's on the pre-approval letter or what I've determined from the talking with the lender. But that's great.
Most buyers like to be on their name, at least for us. So we just can arbitrary money in this amount.
Okay, or yeah. Again, this is an estimate. This is your best guess. So for those of you that might not have heard that, the question was, what interest rate do you use? Whatever the lender quoted might be on the pre-approval letter, because again, that buyer may be capped at that. If interest rates in a volatile time of interest rates, they may not qualify for this. You know, if interest rates go up. So, but yes, just using your best guess, you can whatever interest rate you were quoted for the day would work as well. All right, so then we total our estimate of our monthly payment there, and once again, this is all an estimate. There's the disclaimer down there at the bottom. We do get all buyers' signatures on this. Everyone that's going to be on the loan needs to sign on this. I really think that anybody that's going to be in the contract, whether they're on the loan or not, needs to sign this as well. And of course, we ask for your signature on the bottom of that too. All right, Linda's done a lot of talking up here. We've had a couple of good questions. Anybody else have any questions, comments, concerns about all of that? Yes, sir.
Does that have to be revised?
Oh, great question.
Maybe
Great question. Yes, every time that there's a counter offer, you need to do one of these. Anytime the seller would make a change in any of the financial, any of the numbers, yes, and remember that would even include a change in the closing date, because your prorations would change then as well. Yeah.
So if you want the final, whatever the final numbers is for the contract.
Yes, absolutely. Yeah, great question. Yeah, does this have to be updated was the question on that as things change during negotiations? Yep. And I think that, and we'll talk about this with the seller more specifically, but I think anytime anything changes throughout the transaction, you need to revisit this if it's going to affect the money that they're bringing. And as we all know, when we get to renegotiations of repairs and that kind of thing, money changes. Good questions. Thank you.
Now, so, the key thing here, Dennis, is that the state requires you to do it prior to the time of law. Absolutely, we need to be refiguring and stuff like that as things change, especially if it's the material, if it's a impactful change. The best practice, you should have done this when you sat down with the agency and made sure that they were kind of in the sense space of what these things are. So the second time, the time you do an offer should be not the first time. But I think that's just best practice. Do you want to be out looking for more houses for the buyer, but without them having a clear understanding? And is your true fiduciary duty to make sure they have that clear understanding before you're out shopping with them? That's the question. So just keep that in mind as far as best practice. I don't know if they can hear me on the subject.
Well, I had already talked about that when you were out of the room.
Oh.
I didn't use the fiduciary word, so you know you did get some additional information in there, but yeah, all right. You cannot say those things too much, Brett. No, Brett had just reiterated what I had already said for those of you on Zoom.
Big up there, Kim.
Yeah, right. Yeah, she just enjoys watching you do that. That's all right. Brett had reiterated that but this is not the first time sitting down writing an offer is not the first time you're going through this form. You do this when you are signing that buyer agency or a buyer agreement to begin with, because as he said, kind of your fiduciary duties, if you're going to be their agent, even for that unrepresented buyer, even if you're not representing them, we still owe them some customer duties, and this would be one of those. All right. Anybody want to repeat anything else I've said?
Oh, one thing I would like you guys to know, so if you're looking like credit card, one suggestion, what was the lending company you said you use for the mortgage? The car mortgage for the,
Oh, I'm using Platinum on here.
Platinum's got that. You also have one on your website. Use the McKinney website. There's a mortgage calculator on there. You literally put the numbers in. It gives you quite a bit of information to put on that sheet. I think it's a really great time to actually be on the phone with your lender. Say, hey, can you give me these numbers real quick? And just kind of establish that relationship of you guys working together. I think that a lot. But, hey, can you talk to me about their closing costs? Well, that's a great conversation to have. With the lender, you can get those numbers at the same time.
Once again, something I'd already said.
Really? Not helping me more.
Kim, I know Kim's going to have good information.
From my perspective, I see a lot of estimate sheets, both sides, that are very weak, minimal information, not all of the details filled out, not all the lines completed. On the compliance side, what does the state exactly look for to the point where I'm going to return it if it's not big enough? You know what I mean?
Mm-hmm. Well, that's a question for you to answer.
Well,
For Brett, yeah. Okay, so Brett, yeah, we'll get the broker's opinion on that. So Kim was talking about from a compliance standpoint. Yes, there are weak ones out there where an agent has just put in, the bare minimum, but again, not including. And again, the problem that we have with some of those apps out there is that they are not complete. They don't have the inspection costs on them. Some of them may not even have your commission on them. I've seen a lot of them that have updated with our commission, but so we're going to turn this over to the broker here for just a minute.
So probably the easiest way to answer this question is the key is that you have as much as possible if there's an issue that comes up. Okay. So a lot of this stuff we do because we have to, because it's license law and because we're representing our client in the best way possible we can. But there's also that other side of it. By representing your client and protecting them as much as you can, have you prepared them for if there is that issue that none of us want to have happen. So if we're in front of a judge or if we're talking to somebody about this and we're looking at potential default or some kind of legal action, what do we have to present to show that this was done? So blanks, I would say any blank on this form, blank on the contract, blanks in documents that don't have defaults. It looks horrible. Like it just looks like we're not doing our job. We're not giving the best possible skill and care to our clients. So most of the time those things are left blank because you don't want to go find the information. Not scolding anybody, but the point would be take the effort, go fill it in. If you can't get the information and you can't find a spot to get the information, then you do an estimate and you do the best job you can to estimate it. That would be how I'd answer that question. Does it have to be completely filled out top to bottom? There are cases where not all those like other boxes are not going to be filled in. Right. But the key things that everybody should know about the HOA dues, if they're looking in HOA neighborhoods, all those kinds of things should be filled in. So, and I'll talk to Kim about how much we're going to push back or not push back, but it's still an estimate. So, we've got some leeway there, some gray area for sure, but don't lean on that to not do it. I think is the problem that we're seeing more of. So,
Yeah.
Did I miss anything? Lynn?
No, I think you have any?
Scale of 1 to 10.
Maybe I shouldn't speak, but.
No.
But, the commission is closing costs. There's a lot of the things on home aren't necessarily for the work. So there's information that we did, but technically isn't Usually it's some things. So. In your, you're gonna always look at, you have to do the whole thing. It was your everything. When baby comes, Saturdays, they don't look at that. We're thinking of problems if you think it's, or if there is a problem when you did it. But it isn't. Too much money.
Yes, just so you guys know, it is a laborious process of trying to help you with compliance for the things that you have to do and the things that you should do. We're trying in the compliance area to only really, be real strict about the things that you have to do. Things that we just, hey, we got to have this in the file, or we know we're going to get audited, we know we're going to get a fine or a penalty, or it's going to be a big issue if we get some kind of legal action. But we're also just trying to give you, you'll see, I don't know if you guys are checking, but there's notes in all your files when we respond back that may be approved, but there's a note in there saying, hey, really best practices, we need to see this and this and this and this. And that's to try and help you protect your client and yourself down the road if need be. So, yeah, I think what she said is exactly right. And, Kim and I will get together and be on, okay, this has to be on, this doesn't.
Hey, Linda. Hey, Brett. Can I ask you a question?
Go ahead.
So that form that Linda mentioned, the platinum form, are those only available from the platinum, from title companies, or can they be found on Dotloop, or where can we get hold of them?
Okay, that's better. So, repeat your question, please. We weren't hearing you very clearly.
The platinum form that you've mentioned, are those only available from title companies, or we can use them, using Dotloop?
No, so when we say the platinum one, that they've got an app on they have an app you can download on your phone. I think they even have one you can use on the computer. So when the title companies don't typically put out forms that you can fill out, they've got either apps on their own or they've got hard paper ones you can use. But otherwise, I would just use the ones that we've got. And KCRR is probably the best one to go to.
Okay.
Not today, but
Okay.
I've mentioned it. But
Oh, you did?
Yeah, I
I'm
did.
glad I didn't say that then.
Yeah, so as Brett was saying that, yeah, the one the KCRR uses, or the internal form that we have that's on the portal and the documents.
So my question is kind of just like applying this to some real world scenarios, because we can go to agency and do the estimate, and maybe several months before they actually write an offer or whatever happens. But then we get an appointment to go see a house, and we have a deadline to write an offer within an hour. That's a fairly common thing in today's market. So we may not have time to call the lender or get information, or we're running late at night and that person's not available, and you have to put those things in. So at that point, are you just saying, just use your best guesstimation on what you can have based on what you have available, and that's going to be good enough?
I wouldn't call it a guesstimation, but so I think that's exactly my point. So the question is, if we're in a rush and we're trying to get this done and we still got to get the offer in, how do we handle situations like that? And I think that's the exact reason why you want to have had this done at agency, because now you've got basically all those numbers that you just have to tweak a little bit for the price.
And have your conversation with the lender when you get the pre-approval letter.
So, that's one of the big reasons why I think this should be done as early as you can. And again, it's really just expectations. Our job, in my opinion, is 90% setting expectations and then communicating is the rest of it, right? So, if you've done that ahead of time and you've got those numbers already on the one that you did for them at that point, then in Dotloop, you click the three dots, the little snowman button next to that document, you hit make a copy. It makes another copy. You change the name of it to such and such offer, and then you just change the numbers and have them re-sign it. And it's pretty simple. There are occasions where you have to change a lot, but usually you change in days and maybe a little bit on the price. I'm not chasing interest rates day to day, right? A lot of times if they're really tight on the interest rate, I'll pick the higher interest rate from the very beginning. And again, worst case scenario here is better than best case scenario here, and then having to apologize later. So, I just tell them, like, hey, we're still using that high number I told you about, trying to give you that worst case number. You telling me shut up now? I'm getting some kind of nod. Did she already talk about that?
No.
Oh my God, I swear, you and I are gonna have a conversation, young lady. So, does that help with that?
Yeah.
And I definitely know it's, you know, we have to be nimble and move, and this has to be real world, so I get it.
And I just think there's a lot of lemons that aren't accessible.
Oh, absolutely.
What do you call everybody?
For sure, yeah.
I won't mention any names, right?
I would tell you that one of the things I say probably 4 or 5 times while I'm going over this form with my clients is, these are lender numbers that I'm using here. I got these numbers from your lender. You want to probably have a hard conversation with your lender about where these things fall for you and don't fall, because I haven't heard from them yet on this. So whatever, I will tell them flat out, look, I'm doing the best I can with what I got. So. And the other thing that Linda was saying, you can do multiples of these up front. If you know they're shopping from, you know, 300 to 400, then do one for 300, 325, 350. I mean, it's literally the same numbers, and they can just sign all of them at once. Dotloop makes a lot of that super simple. And then if you end up shopping someplace in that range, you really don't have to, you grab the one that fits the closest and you change the dates and you're good to go. I'll do that if I know somebody's shopping in a really wide range and I don't know exactly where they're going to end up. Is any of that helpful? Did you guys all catch that one?
Okay, all right. Oh, thanks, Brett. I appreciate that very much. I also want to, before we move on, because here is my cheat sheet for the buyer's estimated expense worksheet. And I also have to kind of back up. When I was looking around the room and said who was in class with me, and I picked on Ashley, Candy was in my very first class that I taught. Yes, yeah, because Jane was still in there, and yeah, she was, yeah. I had to shadow Jane, and then she had to watch me teach, and you were in that class. We go way back, so I didn't want to, you know, that was just a personal aside. All right, so here's my buyer's estimated expense worksheet, and the reason I have that in bold, that this must be completed and signed before signing the contract, is because this needs to be completed and signed before signing the contract. Okay. But this has the explanation on everything that I said over the last hour. So here's my chief on every line. And I didn't point out, I did it on here, so I mentioned it here, but going back to the form as well. A lot of this, if your buyers get, because we're talking an awful lot about loans here, if it's a cash buyer, you are not relieved from doing this. You still have to do this. And so it is designated on the form, and then also here on my cheat sheet, the bolded lines are the ones that you still have to do for a cash buyer. And so my explanation here tells you basically what it is and where you would get that information, whether it's from the lender, from a title company, how to figure the monthly payment and all of that stuff. So, no, it's the same form. Let me get back to.
This says, so the underline blanks on there, see how there's bolded blanks on there?
Yeah.
Those are the ones.
Yeah. So going back up to here, it even tells you right up here for cash sale, use relevant bolded lines. And so it tells you in here, the bolds show up over here on the numbers line. You see,
Yeah, it's just where it's under.
yeah.
And honestly, some of those, you don't always need to talk about the cash list. One of them.
Yeah.
One of them survey.
Plus, yeah.
Which, I'm surveys.
Yeah. Yeah. Okay.
Yeah, I'm not saying you put all of them.
All right. Good conversations. And this is an interactive class. I do expect participation in here. I should have said that to begin with. So any other questions, comments, concerns? Before we move on to the other one? All right. It's not your last opportunity, but okay, so. And since we're back, you know, I'm in launch teaching mode here. So we have our seller loop here in Dotloop. Same thing, Platinum Title has an app. You can do buyers closing costs and or sellers closing costs on here. And so same thing. This one is maybe a little bit more inclusive, but I still think you got to input the numbers in whatever app you might be using anyway. So go ahead and just put it on the form. It's kind of the way I look at it. We'll get to my to the worksheet here in just a minute. But again, everything that we expect to see in the seller loop. So our exclusive right to sell, the seller's disclosure and condition of property. We've had some conversations about that in the business meetings over the last few weeks also. The lead-based paint disclosure, if it's applicable to the property built before what year has to have a lead-based paint disclosure? I knew that would be answered in this group. All right. The affiliated business disclosure required form, sorry, also in our loop. Oh, Kim stepped out. I was going to see what else she might be looking for. In the buyer's loop, I do expect to see both the Kansas and Missouri brokerage disclosure form. Obviously, in our listing loop, we're just going to have the applicable state where the property is located. I'd like to see the cyber protection notice in there. Again, conversation that I think you should have with all clients and customers. And then I've got some of the POE and all that kind of stuff. So not applicable to what we're talking about here today. So our seller's estimated proceeds worksheet. So again, we have our header. Header always has to be filled in. Our seller, Sam and Sally Seller. We have our property address and our estimated closing date. So once again, it is not a broker requirement, just a broker preference. And I think it serves you and the clients well, or customers well, that you do this as you are listing the property. And in fact, really, you know, kind of, I mean, I would say before you sign that listing agreement, because once again, what the seller hopes to get and what they realistically might get might be two completely different numbers. And so if we're trying to, what are we going on the market for? Trying to accommodate that seller, you know, the price that they want to see, but then be realistic about what you think the property might be selling for. And again, two columns on here, our internal KW and KC Metro form actually has 3 columns on it. So you have best case, you know, maybe here, and then worst case, because that seller may, in that worst case situation, may not be in a position to sell. It may be a shortfall situation where they would have to bring money to the table if it's real close on that. Or, you know, selling at that price doesn't get us, you know, where we need to be to move on to our new property. So doing this to begin with is a really, really good idea. Again, a good service that you can provide. And I'm going to throw in the word that Brett started using earlier, kind of your fiduciary duty there. You are offering them your skill, care, and counsel. So there's that. Do it at the beginning of the listing agreement. So again, you're not going to have your closing date. You have to kind of guess on that. How long is it typically taking properties to sell in that market at that time? And then our prices here, again, I only did the 1 column here, but again, for seller, prepare them for, well, this is what we're going on for. We hope we can get this, but maybe we're not going to be able to get that and we're going to get this one. So I would use a little bit lower number there. And then from there, we are subtracting things that the seller has to pay from the proceeds of their sale. So their first mortgage or deed of trust, mortgage in the state of Kansas, deed of trust in the state of Missouri. And where do you get that information? So most in today's world, most sellers have that information readily available to them. They can either get it online or they pay from a coupon or they pay from a statement. So that's readily available. And that's and again, you don't have to get down into cents on this by any stretch of the imagination. Do a rounding here because again, that's going to change with every day that the house is on the market. That payoff's going to change a little bit. Always, 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 always ask if there is a second mortgage or second deed of trust. And I would even say word that as many different ways as you possibly can. Junior mortgage. Do you have a HELOC? Have you ever used the property for security for any other loan or collateral for any other loan? Ask that many times and as many different ways as you can think of, because, you know, do you have any second mortgages? No. Do you have any junior mortgages? No. You have a HELOC? Oh yeah, we got a HELOC. Oh, well, that has to be paid off too. And I think that was one of the situations that David had talked about that kind of led to some problems there. So make sure. And so that, because anytime the property was used as collateral security for the loan, that has to be paid off from the proceeds of the sale. So we include that there. And remember, there's no such thing as a third mortgage. They may have 2 or 3 junior mortgages. Yes, sir.
Yeah, the seller last year went to the Nebraska Furniture Mart and replaced the refrigerator, the stove, the dishwasher, the microwave. Had it all installed, they're paying them on their card, but it's not tied to the house. So when you get there,
they're leaving all these things, but they still owe on their Nebraska card. So we found out last minute. So we got their statement and we gave the title and said, these have to be paid off before they close. Otherwise, they would have closed on the house and they could have defaulted on that. I don't know, has that ever been up for anybody else?
There's not, I'm pretty sure, I have to double check, I'm pretty sure on something like that, they can't go get the appliances.
Right.
There'd be a claim on the individual who didn't pay the bill.
Right.
So it would not be, I mean, if you got settled, it would not be something. So these questions are.
They were okay with that.
For those of you that weren't maybe able to hear that, the question that we're dealing with is, so a seller bought all the new
Appliance
appliances
package, yeah.
and put it on a credit card, and then did that have to be paid off at closing, but the seller requested that it did, and that's fine.
Yeah, and the specification, the thing I wanted to really specify is asking these questions like Linda's talking about multiple times is great to find out little things that could cause an issue. In that case, it probably would have been okay because they would have gone after the seller. They wouldn't have come to knock on the door and taken the appliances, and they wouldn't have put that debt on the new buyer. But still great to have it happen that way, so you're not kind of you're not leaving your seller, the other seller in lurch too.
In a new house, still paying fines
Right.
for your old house.
Exactly. Now, when it comes to new construction and something like that, if it's done, and I've seen where builders have separate loans for some of the materials or some of the, like if you're representing somebody who's building a house and they've done something like that and it's all tied to the actual property, then it could probably become an issue.
With
But
the water system, probably all that whole.
I mean, it's probably case by case, but I would say it's great to ask these questions and find out. I think in that case,
Solar panels.
solar panels, I mean, when you get into some of the properties you deal with, there's probably outbuilding stuff that happens, there's probably equipment stuff that happens like that. So it is something to keep in mind.
Yeah, no, that's great.
I'm a bankruptcy paralegal as well, and the right of public firm is a secured creditor. They can do a right of refund after they go get that, after they find the sellers in default or whoever got the property is in default, they can go get that property. They have gone and gotten that property.
Oh, so they can't, okay.
It's the right of they go get it. They do go get that property because it belongs to them. It is secured by that property. So it's good if the seller did pay it because they have every right to go get it back. So you want the seller to get sued for not paying off the property.
That's why I was about to run down there and write down a note to check with somebody. No, it's good to know.
Yeah, it is good to know.
Done active bankruptcy in 2 years, but the rest is always secure. So it belongs to them, and the fine print it says it belongs to us and keep them.
Huh.
They're one of the only last few secure creditors.
So what we're talking about over here with one of our attorney / agents is that actually they may be able to go get those appliances. Yes, Lynn. Right.
It's whatever, when you sign those forms, it's got it in that fine print. Anything you buy here that you're paying credit on is that. So if you do the same as cash and you do the interest, like you're making interest for a month or something like that, anytime you buy it, just anytime you buy something that you haven't paid it off, they have a right to go get it back.
I'd be curious to see how that would fall into being allowed on the property that's not owned by the person they have the loan with anymore, but because as the new owner of the property, I would be able to say, hey, you can't come in.
Would get there's several notices, it gets to a final stage, it's like 6 months of no, not current income. There's several notices that your seller gets, and we've had clients who've done that. They waited to the last possible minute, and Nebraska's like, look, I don't know what else to do. You have forced me to now file suit. They would have sued the seller before it got to that stage. And then the seller is still ignoring them. We're talking about a year later, the seller's still ignoring them, they go get it. And they have every right to have a judgment to go get it.
But the quick and, I mean, I think the big point of this is just like Craig was saying, the more questions, and like Linda was saying, the more questions you can ask about these kinds of things. That may or may not be tied to the property or equipment of the property is important.
Thank you.
Exactly. Well, no, thanks for bringing that up. Every situation is going to be different. Every situation is going to be different. So just ask the questions as many different ways as you can. Number 9 is any other encumbrance. And I know I said earlier that I like to have zeros and everything, and I see a couple where I didn't put zeros. So, do as I say, not as I do. So other encumbrance can, again, kind of be a big umbrella. There are special assessments on some properties that sometimes have to be paid off before the property is transferred, or that the seller has agreed in a past date to pay off before it's transferred. So we have that kind of encumbrance. Other encumbrances also include any other judgments that might be against that person or that property. A general judgment can be applied against any personal or real property that someone owes. And if there are judgments sitting out there, again, every situation is different. You may or may not have a good feel or a good insight into what's going on in every situation, because when someone's having financial problems, they're usually not real forthright, and especially at this point. So just ask the questions. Any other judgments that you know of? Anything else that might come up that would have to be paid off at closing? And again, just remind them that personal and real property is subject to general judgments. Yes, ma'am.
And so let's say you've done this and your sellers are headed to closing, but they have asked for payment concessions, or the buyers ask for payment concessions, and so you can give that. Is this where then they can be put in there?
No, that'll be later on. Okay. Good question. All right. No, so the question was during a negotiation, if the sellers offered a carpeting allowance or a painting allowance or something, is that where we put here? No, the encumbrances are things that are something about the property itself, right? No, the good question though. All right. So first mortgage interest proration. Oh, here we go with that proration word again, and interest. So just like the buyer has to pay interest from the day of closing to the end of the closing month, the seller is now in the position where kind of the balance of that on their current loan, their interest is accruing from the first of the month of closing to closing day. And yes, the lender is going to collect interest on that closing day as well. So it's the same, it's the same process that we used for the buyer interest, just counting the other days of the balance days of the month from the first of the closing day. So I've got that figure interest over here as well. So on my cheat sheet, I had a figure for the buyer up at the top of the sheet, and then had a figure for the seller. It's prepaid interest for the buyer and accrued interest for the seller. So once again, if you want those cheat sheets, email me and let me know. And we do that for any of those outstanding mortgages or deeds of trust that might be there. Since I put in a second mortgage there, we'd also have to figure that interest proration on that second mortgage as well. Tax proration, and this is probably one of the number one reasons why people don't like to do this form, is because they get to this line and it's like, I don't even know what that means. So tax proration, just as we talked about the HOA proration back there, tax proration. Remember, here in Kansas and Missouri, we're really fortunate that both states do it almost the exact same way. The taxes start accruing on January 1st of the tax year. And so if we're closing here today on February 18th, the taxes started accruing either Kansas or Missouri on January 1st. On closing day, the seller, this is the one and only day. Remember, this is the one and only day that anybody has the ability to collect money from either party, other than from the monthly payment from the lender has for the buyer. But this is the day that we're exchanging all of the monies between all parties. Who's going to get the tax bill at the end of the year for this property that's from January 1st to December 31st? The new buyer. They have to pay for the whole thing back then. So on closing day is the one and only opportunity that we have to collect the seller's portion of the taxes. They have owned the property from January 1st to February 18th, if that's our closing day. This is the day that we collect those taxes from the seller. Again, the entire tax bill on my figure proration form back here. I should be able to get to it. Here we go. Figure proration, how to prorate. Decide who's going to be paying at the closing table. It's going to be the seller in this situation. Determine that daily figure. So if it's the taxes, the $4,800 divided by 360. Determine the number of days that the seller is going to owe for, and always count the day of closing as something that that the seller is going to be paying for. I have to say that differently in test and for class, and I almost did that there. Determine the number of days, and you multiply the number of days that the seller is going to be paying for by the daily amount. It's really not complicated. It truly is not complicated. If I can put it all for both sides of a proration on one sheet of paper, it's not that complicated. All right, and your apps will do that for you though too. All right, mortgage prepayment penalty. This is one of those things that you're probably not going to know. There are prepayment penalties out there. They're not nearly as common as they used to be, but they are still there are still some lenders out there that do charge a prepayment penalty. Your seller may or may not remember that it would be charged to them. So ask it. If they know, they know. If they don't, then, you know, there's nothing really. That's one of those things. We're doing the best that we possibly can with the information we're given here. Everybody understand what a prepayment penalty is? I guess I should maybe start asking those clarifying questions too. Anybody subject to, I mean, have you seen it come up? Necessarily? Yeah. I had a student in class tell me a couple of years ago that they were charged, I always suggest to my buyers that, kind of pay up on your monthly payment, and it kind of shortens your payoff period and all that kind of stuff. Lenders have those conversations as well. I had a student tell me a couple of years ago that they tried to do that on their monthly payment, pay a little extra, and they were charged a prepayment penalty for that. That was news to me. All right. Title insurance policy. Our contract says that the seller is going to provide that. The seller is going to do the title search and provide the owner's policy, title insurance policy. This is a number that you will get from the title company, just as we get the escrow closing fee from them. So whatever title company that the seller chooses. And I am going to say that again, whatever title company that the seller chooses. You don't choose the title company, you give them options, but they are the ones that choose the title company. They're hiring the title company. So, and so go look on the rate. I don't know of any title company around here that doesn't have a rate sheet readily available on their website. So if it's a title company you're not used to dealing with, just go on their website and look. The escrow closing fee, again, if that's a figure that you will get from the title company, the closing fee that they charge on the seller side of that. Any unpaid assessments is not assumed by the buyer. I talked about that earlier on the encumbrances too, but this is specific. And again, sometimes we just have to, it's like, our 8-page seller's disclosure with all the teeny tiny print on it. Most of those questions are in there. I don't remember when we got that information, but a lot of them are in there just to try to spur the seller's memory of something. It's possible that seller did sign a right of first refusal 15 years ago. And so reading that question on there, oh yeah. Well, the unpaid assessment on here is kind of one of those too. Oh yeah, that's right. There is an assessment that either I'll take care of it or I have to take care of it. So those are kind of specific to areas, sometimes specific to subdivisions or communities. So, and you'll get to know those, I promise. And the broker's compensation. So once again, we put that in here, whatever your agency agreement says or whatever agreement you have with that sellers, what you're going to put in here. I always do separate that out, the $495 when I'm doing this too, just because it's separated out on our agreement. So I separate it out on here. I know that we've talked about just getting rid of that other compensation line in the past, but as long as it's there, I'm still going to use it. All right, homes association dues. So we talked about prorations before. From the buyer side, the buyer has to pay for what that portion of that they're going to be using. I'm going to say this even though the broker's in the room, a past broker's in the room, and our compliance person is in the room. I don't put anything on here for the seller because that's bonus money for them. So, okay, all right. That they would be getting back. All right. If it's something, if you need to figure for the month, the part that they're going to be paying for the closing month, absolutely. But if it's
It's pretty hot, so.
Yeah.
I would treat it out case by case basis.
case by case basis on there, absolutely.
You know, they almost $2,000.
Yeah, no, exactly.
$18 a month.
Yikes. You all are hearing some of the numbers that Brett's throwing out back there, that some of the HOA dues are getting very, very, very expensive. So yes, absolutely. On something like that, whatever the seller is going to be paying for closing month, if it's a monthly charge, absolutely. I didn't mean to completely dismiss that. If it's an annual fee that like on the other side of what we did with the buyer side over there, the seller's going to be reimbursed for what they've already paid. So, all right. Yeah, absolutely.
You like the shows. You're gonna get reimbursed. Hey, look at the $130. They go to don't even go. It flags up the form when you're going through this.
Right. The release of lien fees are also a county charge that may or may not show up. But you know, when there's a loan payoff, a previous loan or deed of trust that's been we've gotten a deed of reconveyance in there, the county may charge. And this is one of the, I usually don't put anything in here, but I do include other down at the bottom. And so I'll get to that or on this next line here, on line 21, overnight fees, etc. So if the seller has a loan that they have to pay off, that will be overnighted. We have to overnight that. The title company will overnight that because of the interest that accrues every day that's not paid. And so $100, maybe even $200 to cover all of those kinds of little fees that may just crop up.
So if there's no mortgage on the side, we would have that.
Yeah, right. There wouldn't be anything. Yeah, on either one of those. Potential additional expenses on line 24, buyer broker compensation. So in today's world, prepare the seller that they probably will be asked on any offer that they receive to pay that buyer broker compensation. And this is a good time to have that conversation with them. This is a good time for you to hear what their plans are. One of our agents here has been talking to me the last couple of days, working with the seller that says, nope, not doing that. Okay, all right, but now you're prepared. All right, buyer's closing costs paid by seller. So and again, if you're doing this at the beginning of the agreement or with every offer, and I haven't made that point really clear here either. If you're doing this at the beginning of the agreement, I'm trying to prepare the seller for the absolute worst case that I can think of. And so I put some closing costs in here. It's quite common that a buyer is going to ask the seller to contribute to the buyer's closing costs. So I usually use like this number, again, depending on the sale price of the property, and what we think that the typical buyer's closing costs might be, but I really do try to prepare them with something on here. The FHA or lender discount points, most of the time that's going to be included in the closing costs if the buyer's getting discount points to reduce their interest rate and the seller's going to be paying them. The reason this is a separate, again, just a history lesson here for you. The reason this is a separate line is because back in prehistoric days, when I first started selling real estate, all of the dinosaurs getting their loans, if they were getting an FHA loan or a VA loan, they could not pay the discount points. It had to be a seller expense. But that rule changed many years ago. The form still shows it that way though. Home warranty fee. If the seller is putting one on the property, you would absolutely include listing, you would absolutely include it here. If you think that the buyer might be asking for one. And again, this is kind of a case by case thing too. If we know that the furnace is 10 years old and the HVAC system and that there's some problems with the plumbing, go ahead and prepare the seller for it. Have that conversation. Do you want to be covered while you're on the market? And then transfer that to the buyer and it can be a great marketing tool. You know, yes, we know that our furnace is on the older side, so we're going to provide a home warranty for you, buyer. So have that conversation with them and include that on here if the seller is agreeable to it. Inspection related repairs. I usually use about 1% of the sale price of the property here. Again, preparing the seller for the absolute worst. Even if we are presenting this at an offer, we still don't at that time have any idea what the buyer may be asking for. So again, worst case scenario here. The wood destroying insect treatment, our contract says that unless it's changed in any other way, that the seller is responsible for treating the property if there's evidence of active, current activity or untreated previous activity. So prepare them for that as well. And then our other here, again, I just kind of try to include as many others as I can in there. I have $100 up there for the overnight fee, et cetera, but then any other thing that might come up. So, and use whatever figure in there, reasonable figure in there that you feel comfortable with. You know, I might decide to up that to $200 or $300 here because things do pop up. So, all right. So then line 32 totals, everything that has to be paid off at closing. So that's going all the way back up to our mortgage payoff and then approximate net proceeds there on line 33. And then this is where you have that conversation with your seller, with the sellers. Is that what you were expecting? Never ask if that's what you were hoping, because that would be, you wouldn't want that answer. So
If you're on this selling themselves saying, I'm selling this as and I'm not making it there, would you leave those lines to 0 or was it?
well, I know, well,
I know what,
right. And, you know, sellers say that, and, you know, I've known sellers to change their mind about that when they got a really good offer. So yes, I would. Yeah. But on the other hand, then we also, thank you, and again, thank you for reminding me, I didn't say this to begin with. So we really, really I'd like to see one of these from all of my new agents. I'd like to see one of these when you take the listing. I think the broker likes to see this when you take the listing. It really does help you and the seller make good decisions, whether we're even going to go on the market or not. This is one of the, so now when it has to be done, we have to present one of these to a seller with every offer that's received. With every offer that's received. So if you are lucky enough to be the listing agent on one of those properties that's getting 8 offers in and you've set your deadline for 8 o'clock on Sunday night and they all come pouring in at 6:30 or 7 o'clock or 8 o'clock on Sunday night. Yep. Sit down and do this for everyone. Pardon? Every offer, Mackenzie.
Not just the acceptance.
No, every offer. Because think of all the things that can change this. Closing date can change it. Well, this buyer's offering more, but asking for some closing costs. So think of all the different ways that can change and what the bottom line is going to be. I know that comes as a big surprise to a lot of agents, doesn't it? I know. Yes, sir.
You're requiring sellers to sign every one of those 2, or are you just providing to them for information? They've got to sign every, so if you have 20 offers and they would sign 20 before they make a decision, just so you have proof that.
Well,
they do.
they don't have to sign for the decision, but
Well,
I present it to them to sign it, and that's, you've done the job. You can show it, especially if you do it digitally, you show it.
Yeah.
But that's what they said. Yeah. That's what we're going to sign.
Right. Right.
I'm just asking. I mean.
Yeah, we do.
That, wages were used as registries, so we have been that, so they won't be able to all
That's
the now.
That's what I'm saying.
Yeah.
Yeah.
To make sure I'm not the only person screwing up.
You know, and as when I'm talking with my pre-license classes, I know I always go through the thing about that. The test presents things like we were still selling real estate back in the 1950s, and they think that they kind of present it that I think, I should ask Lynn this to see if they've updated any of this, but it's like, well, no, you go meet with your seller face to face with every offer that you get. And you meet with your buyer in person and get wet signatures, and you actually collect a check for the earnest deposit and all of that. So, they think that we're back here, and these forms are kind of that way too. One of the things that's great about Dotloop or DocuSign, whichever one you are using, is that when you send it to them, you've pretty much done your job. We still like to see that signature on there, but sharing it with them, yeah, that meets your obligation, the minimum obligation that you have. So, yeah, I think we had a question over here or comment.
Well, I mean, we created this on a spreadsheet. And we list everything for every offer, even the Main Street renewal that's 50,000 below. We put everything on there. And then we drop signature blocks.
Underneath each one.
Make them sign that way we can show that we presented everything. But then the one that they accept.
Yeah, then they sign this one.
This is the one they accept.
Right. For those of you that maybe didn't hear that, Lynn brought up, and then we did a couple of, which is great. Yeah, I should have said that too. Yes, you can develop a spreadsheet that breaks all of this down so that you're presenting the numbers to the seller all at one time and getting their signature on that they have been provided with that comparison between all of the offers that they received, and then have them sign the actual one for the offer that they have accepted or are going to be
Make
counted
a
to.
sign description as well, so you can show that everybody that you actually presented all offers.
Exactly.
With whole.
Right. And just as we talked about on the buyer side of this too, if they're making a counter offer, new one, right? They are presenting what the offer was, and now if they're making a counter offer, you develop a new one for it that reflects the terms on that counter offer. So I think, and I've got my cheat sheet for that too. Again, explanation here on every line where you would get the information, what it all means. And so I've got that available for everyone here. I've got my how to figure interest, how to prorate, my buyer's estimated explanation, and my seller's estimated explanation. If you email me, those are the cheat sheets that I can send to you.
You also send out in writing, asking them for mortgage information, all that stuff. Because our information is only as good as what we're giving back. By ourselves, so like if we want to have a record that you have asked them for all of that information. Because if you don't get it, if you say you have a second mortgage and then they tell you no, and you don't write it, you put 0 in the article and later put that was, then it's just your word to send them to last, right?
Well, that's one of the reasons why it's printed on the form, right? I mean, it gives them the opportunity to disclose it.
So we try to pull up the outside, so not put this down. It's not.
Yeah.
What better you can get, better.
That question was, well, what if you ask them about a second mortgage and at the time they told you no, can you be held liable? Well, it's on the form, that they should be able to
It's also in the contract.
answer, and in the contract, yeah, all of that disclosure stuff, yeah, right. And here's another one. Here's another time when we can kind of reiterate this. If you do the same thing every time with every seller, you go through this process with every seller, you have proven that this is the way you do business. So it's like, well, I asked this one, but I didn't ask this one, so make sure that you have your checklist, right?
So the concession would be on that other fees line. If you're doing a concession, would it be on the other fees line?
Compared to
Right, yes, exactly, yes, yeah. I'm sorry, I didn't point that out when we were there, yeah. But yes, when you get that offer, if you're making, if this buyer's asking the seller to pay, and again, remember, anything, and all of those costs that we talked about on that buyer sheet, whether they're paid up front or paid at closing, are all reimbursable. The seller can, by the seller concession can include the prepaid items, everything on that sheet except for the down payment. It's a reimbursable seller concession.
Real quick to answer a question that came up earlier, because I just finished looking at them. McKinsey in the room had asked about on MLS, there's a tab called financial. I've actually seen it many times, but never really looked at the forms that are on there. There's one for buyer's estimated sheet and a seller's estimated sheet, which she says her team's been using. They have the bare minimum on there. I would encourage you to maybe add you can use that sheet still, either add the compensation really clearly to it, some of the other factors that are on the KCRR sheets if you want to use that. But it actually is a good sheet if you want to, because it's got, it's kind of similar to what you would go on your website and put in your mortgage calculator. It's got a really quick, easy fill out form, and it gives you some quick numbers that you can use and transfer those onto the KCRR forms as well. So it's another tool that you guys could make use of. But again, I think Linda did a great job of kind of going through all the details and everything, but the most important thing we want to make sure you guys have on here to kind of meet all the requirements is make sure you're detailing the closing costs and your commission expenses, and then your title fees and things like that are the real obvious fees that you know are happening. Make sure you're detailing those. If we get that down, we're covered on the kind of legal side. Anything else you do would be your extra service that you need to be doing for your client to show that extra care and skill and fulfilling your fiduciary duty and all that kind of stuff. Cool.
So
Have any questions? Come see us every Wednesday at 11 o'clock, which starts in 20 minutes.
So just as Brett was saying, I probably end with this. As Brett was saying, that using those MLS forms that you have to add onto it. If you're using one of the apps that doesn't include the inspections and any other thing that you find, use that form, use that printed form, and then, but again, it's just extra work, so you might as well just go ahead and use the KCRR form. Add the lines that you have to add to that and refigure the total of that, and that would count.
And again, if you guys want to, if that's kind of your system, you want to show or you learn how to do that a little bit more efficient, come to one of my .loop classes and come talk to me on Wednesday at 11, and we can kind of walk through how you can drop boxes onto those forms and do that kind of stuff and refigure it. It ends up being extra work. It's funny because we think it's easier in our heads, but it ends up being extra work than just filling out this form and getting used to it. Once you get used to these forms, they work pretty well. So.
Anything else? All right, I'm done. All right. I'm done with everyone here.
Hold on,
wait a minute.
I wanted to clarify, sorry, Linda, a couple people were asking, so the forms you have printed up here. Did you already talk about where they can get those? Are those on the portal?
No.
Okay, so they're by paper.
They're here, or email me and I'll send you a
Okay,
PDF.
so any of the forms that she was talking about, it's got her shortcuts. They're up here. You can scan them in or email her and she can send to you.
No, these don't go out. I just want everybody to know, these don't go out to the general public out here in the brokerage. These are for the special people that showed up for the class.
You're special.
That's right.
And those of you who are online, is this the class you go through when Jerry's having trouble sleeping? You just read this class to him at night?
Exactly.
What's up, Jeremy?
All right. Thank you all for joining on Zoom. Let me know if you have okay, thanks, Jasmine. I see that. Oh, I've got a few chats here, maybe.
Thank you so much.
Yeah.
Thank
Either-
you.
call me at either one of those email addresses. If I need more, I'll go copy more. Okay. All right. Thank you all.
Thanks, Linda.
Thanks, Ashley. Okay.